We're told that authorities are reviewing the revenue sharing formula for SACU. Who's likely to be hardest hit?
Well, our core view is that Swaziland would be worst affected. Currently, Swaziland does receive about 9% of the entire revenue pool as a whole. We should see this declining to about 3% over the next few years. And obviously most concerning is the fact that Swaziland doesn't have enough avenues in order to plug the gap that's going to leave.
All right, we're told that their share has dropped about 11% in the last year or so, largely because imports have declined because of the recession. But why is Swaziland particularly vulnerable? Why this dependency on SACU?
Well, over the boom years, between 2004 and 2008, Swaziland actually built in this revenue as a permanent source of income, which is obviously wrong on their part. So when the global economic downturn hit, they were obviously very severely affected by it. As well, one of their biggest expenditures in their monthly bill is the large civil servant wage bill, which is most concerning and probably one of the things that needs to be fixed quite urgently.
Let's talk about some of those structural issues in Swaziland. So there's a huge public sector wage bill. Some experts have raised concerns about the exchange rate and saying that the Swazi currency is a little bit overvalued and that productively the economy is not very weak and that you have a lot of the skilled labor not actually active in that economy working within the region. What could they do to sort that out?
Well, you know, Swaziland does have a fiscal adjustment roadmap in place at the moment that they are hoping would actually help to solve this problem. The enforceability of it is still questionable at this point because one of the things that the roadmap does suggest is the firing of 7,000 civil servants in the economy. And you have to understand that for every one person in Swaziland, they support 5 other people. So you're looking at 35,000 people who would be in severe economic distress because of that. But yes, that is the official plan at the moment, the fiscal adjustment roadmap to help them out of this.
Any other sort of interim measures that they could take?
Well, that is their plan right now. They do have the mentorship of the International Monetary Fund. No official support at this moment in terms of finance, either from the IMF or the World Bank or any multilateral organization. So that is their one and only plan at this point in time.
It's not just Swaziland that's affected. It's also a small country like Lesotho. Could you tell us a bit more about that?
Yes, Lesotho is slightly concerning as well. Not as concerning as Swaziland to us, purely because Lesotho does have official funding support from the IMF. They have an extended credit facility at the moment, and they do have big infrastructure projects in the pipeline in terms of a new dam project, mining projects. So our concern is not as big with Lesotho because they have other avenues of funding.
Now, when this issue of the revenue sharing was raised and just the fiscal challenges facing Lesotho and Swaziland came to the fore, it raised the question of potential bailouts and whether or not there is the mechanism within Southern Africa to intervene at that level. Is there?
I think at this stage we cannot rule out a bailout of Swaziland. Where that bailout will come from, we can't exactly say for sure.
Okay, some would say it comes from South Africa. South Africa ought to assume the role that Germany has played in Europe with regards to the Southern European crisis. Is South Africa in a position to do so?
As well, you can't exactly compare the Swaziland to a country like Greece at the same time. So the bailout that they would require is obviously on a much smaller scale. Their GDP is about $3 billion per annum. So it's on a much smaller scale there than Europe.
Okay, let's move our attention further afield beyond SACU and talk about issues that are just impacting on the world at the moment. The situation in Japan and whether or not it would have any repercussions for Africa.
Obviously, the direct impact will come in terms of trade, countries that are trade partners with Japan. As well, we'll probably see a decline in the direct investment onto the continent from Japan, and also a decline in donor aid. Indirectly, the effect will probably come in from the perspective that commodity exporting countries would be hardest hit. In terms of platinum prices, oil prices, uranium and things like that.
Yeah, and obviously we've started to see that because everybody's concerned about Japanese demand for oil and what that's going to do for the oil price. But Japan has been active in Africa, not just as an investor, but as a technical development partner, so providing assistance to countries like the Sudan, to Tanzania, for instance. Are we likely to see that withdrawn?
I think that the commitments that are already in place will obviously stay in place, but going forward we might see a slight decline, but as the Japanese economy starts to rebuild itself, that should pick up quite nicely again.
Okay, and just by way of, technical development and what that means, because, for a country like Southern Sudan, it literally means getting in all those engineers, getting budget support, getting the expertise to help that country as it emerges into existence. With the Japanese not quite there, is it a vulnerability for Africa in general?
I wouldn't say it's a vulnerability. Obviously, there is still to a very large extent an Asian focus on Africa, which comes very much from India and China, so that is still very much in place.